down about here. So spec somewhere in this range, I think, is probably a reasonable first estimate. This is a 2-hour chart. No, I don't see that. This is how I like to look at it, where I see daily, 12-hour, 4-hour, 2-hour all together here.
I've seen people trade 77 minutes, well, on some 79 minutes. Not sure why.
Well, figuring that for the stock indexes, the cash market is opened for 6.5 hours a day, which is 390 minutes. So it's quite possible that they're using something like 78, which is 20% of that, which they're dividing the day in 5. So using a 78-minute would make sense if you're trading the cash market. When you're trading the futures market, which is open 20.5 hours a day, or 23 hours a day, excuse me, doesn't really make a lot of sense.
Okay. Yeah, like I noticed on the SPX, which is the cash, right? 77 minutes. That what we
probably
use.
78 minutes is probably more likely because it's open for 390 minutes. So you divide that in 5, you get 78 minutes.
And the 5 is because of why? Why
Well,
you
it
use
could
5?
just be they're dividing the day in 5. That's all. I mean, there's no hard or fast reason. I mean,
Yeah.
That's why daily and 12-hour. I use 12-hour because it's half the day, and it really is just helping define the daily chart, really. So that's what I'm saying. So when you look at these daily setups, right? So I'm looking at the daily fractal coming back in ES, right? So yes, we can look at the daily setup to say, well, this was your key high and this was your key low. But if you look at the 12-hour chart equivalent, this was your key high and this was your key low. So this key high, based on that setup, your target is right here. Your target is 2 points above where we are right now.
Okay.
So is this the correct one to use, or is this the correct one to use? Okay. Well, logically, by my thought is, well, this was a low and this was another low. These were key lows, and usually you'd want to use the high, the point, the swing high that's between them, which would be this top. And that's why we use that. If I look at similarly, for example, NASDAQ, right? Well, the NASDAQ one, there is no daily setup except for this short position right here, which was this high, this low, and this high. Right now, this is all retracement. But if I look at the 12-hour, then this was your key point here, because this point and this point were, well, this point should be ignored. This was it was really high, low, high, low. Now you've gone up, and your target was right up here at 69.42. So that's been reached. Okay. Similarly, if I look at the Dow, okay, same idea as the S&P. Here was your high, here was your low. Your target would be much higher. But when I look at the 12-hour, here's your high, here's your low. This target is 24,805, which you haven't gotten to yet. You've gotten 40. You're 40 points away on the Dow. So 40 points away on the Dow, and you're about 2.5 points away on the S&P. That's basically almost the same thing. So these two together are telling me, this is a key target level, and you're getting over the two standard deviation bands here, which the indexes typically fail at. See here, you got up to the second deviation band, you failed. Here you got below the second deviation band, you failed. Same things here. Here you got down even to the 3 standard deviation band, it failed. Same thing, all the same thing right here. But usually, you get up a little bit over, that's pretty much it. You're down below. So you're up at a level which to me is very dangerous. I still, again, there's still always a chance of going higher, of course, but my oh, look at that. Beans are all the way back down now. Guess I won't get my short off. Thursday, Wednesday, here was your thing. Okay, maybe tomorrow. You could get another shot up tomorrow. So it's fine. Just leave that for now. But anyway, yeah, so same idea here, bonds. The same idea. It's all the same to me.
Okay, so that's a euro. Do you prefer to chart like the month or just go /6?
What's that?
I noticed you put the month here, the MH,
Yes,
right?
always, always,
Always. Okay.
always. I mean, it's not as critical for the financials. Well, for like the currencies, it's not as critical, or the stock indexes, but for a lot of other things, it's very critical. For example, because you look at something like here, you want to look at something like grains. So if I just look at, you look at the grains. Well, the May soybeans trade right now. They're only 3 cents difference, 4 cents here. So that's not a good example. But for many markets, like take something like natural gas, which I don't really trade much anymore, just too much of a pain in the ass. But if you look at that, you'll see, um, there's quite a differential when you look at the market. So, this one's not so much, but sometimes you get huge, huge differentials in them. So if you're looking at without the specific month, like take cattle, for example, take hogs, for example, right? Like May hogs is still now June is the active, but they're not too bad, much of a difference. But, you can get some very big, significant price differences by looking at, I mean, take right here. You want to see a good example of that? Let me show you the cycle charts of hogs. Okay. Take a look at this, where you switch contracts. Here's where you were for the April contract, and here's where you were for the June contract. So that's what happens when you look at these things without the months, right? I mean, obviously there was not a big rally in that period of time. It was just a contract, right? Here it shows on the weekly, it's showing you a huge rally. Well, there was no rally, right? So that's why looking at these things without the months is, it can be counterproductive. I always look at it at the specifics. I mean, that the ideal would be to look at the cash markets too, like I do for the indexes, or you could do it for the currencies. So that's why it's not as significant. I mean, ES, there's not a big spread now. It's only like 4 points. But for example, you want to look at, the yen. In bonds, it's about a point right now. The yen is not too bad. Where are they at? So the June is at 91.60 and September is 92.15. So it's like, 55 cents. But you can always look at, you can always look at the forex market instead. You want to look at the yen, look at the forex market, which is always going to be, you're not going to get those variations, obviously. So when you can, it pays to look at the cash market, right? Like SPX, the same thing. So again, here was your target, your setup on the 12-hour, 2660, 2594 is 66 points. 66 and change takes you to 2727. Well, you're at 2726 is your high right now. So another point or so and you're done.
Nice.
So again, it's just, it's just a question of how you look at it. I always find, I've been doing this a long time. So, to me, it's looking at this specific month is much more relevant because that's telling you where the actual points were as opposed to comparing, if you're trading a contract and you've rolled to the next contract, or, you want to you're not looking at the specific month, you're comparing it against the price that it never traded at.
Right.
So
Do you look at the month of May? Like they keep saying, sell in May.
Sell in May and go away. That's what they say.
Yeah. Do you look into that or no?
Interesting, right? It's May.
It is May.
That's another point in favor of going short here.
Well, last May I think we went up. So.
Well, last May it did, but okay. So this May, So again, so it's like, what do you want? How do you want to trade this? It's like, I'm looking for June 9th, June 10th for a major low. It's like, well, one way to trade it, and what I might do here is put on some spreads. You know, here take a look at this setup, right? So it's let's say this is a setting up for another weekly sell-off, right? Because this high is now higher than this high. Okay, so you'd use this low at 25.91 and this high at 27.25, let's say, right, is 100 and we said 135 points for arguments. 135 takes you down to 24.55. That's your target. Okay, so I'm saying, and look where your Bollinger Bands are coming in on the weekly, right? Your second standard deviation is here. Your third standard deviation is here. 24.50 is right in the middle. That's another thing that tells me, okay, is usually you go from the top band to the bottom band. So everything is telling me somewhere around 24.50. So if you wanted to do something, well, you'd say definitely if it gets under 90, that's confirming everything here. So what do you want to put on a spread right now?